We are back with another fantastic strategy, guys. This strategy will use only the 15-minute time frame. It applies on all assets and it uses just two patterns where you will be identifying your fair value gaps. Let's hop straight into the rules of the video, those simple rules that even beginners can follow. Let's just begin with the video. And here I've got the rules for this strategy, guys. The rules are very simple. Number one, just go to the 15-minute time frame. Number two, identify a trend, which is gonna be very easy because I'm gonna show you. You will be identifying the explosive moves only. Number three, find the lowest or the highest if we're going to sell 15-minute fair value gap, and we're gonna be showing examples. And number four, follow the steps that I am going to show you, guys. Very simple steps. Two patterns only. Now let's leave this thing to the right and let's go ahead and talk about our patterns, which are very, very simple. And the fair value gap, for those of you who do not know, is the gap that is left from the bottom of candlestick number 3 and the top of candlestick number 1 in this occasion, where we have a bullish FVG. Let's just note that down for beginners. Look if this is number 1 right here, okay, of the 3 candlesticks. We have candlestick number 1 right here. Candlestick number 2 is this huge bullish candlestick. And candlestick number 3 is this candlestick right here, this green candlestick right here, guys. So number 1 is this bearish candlestick, number 2 is the huge bullish, and number 3, the other bullish candlestick. If you see, there is a gap that is left, a gap that is not filled on candlestick number 2, and the gap is left by candlestick number 1 not filling it in with the wick, and the very same thing with candlestick number 3. This is your gap, your fair value gap, okay? This is the FVG area. FVG is this area right here. It is important that we take into consideration beginners as well because they want to learn. Before I proceed with this thing, because I'm teaching a bunch of stuff for free, and this free YouTube channel is better than most people's or fake gurus academies or one-on-one mentorings and stuff like that, you can support the channel. If you cannot afford any of the services, no problem at all, but you can support this channel in order for it to continue existing and providing free material. You can go to my YouTube channel right here, click where I have the 6 more links where you see right here, or you can click more on my homepage and you will see you can go to all prop firms and codes discounts over here. It will take you to my website. You can click on my links and the best discounts with my codes, or if you don't want to do that, you can instantly click on those right here, on those URLs that I have, and it will take you to the best prop firms that I have, and then you can use code ChrisFX and get your accounts. This is the way to support this channel. I have been providing a bunch of free stuff that has helped thousands of people for free, absolutely for free. There are a ton of people who haven't had the need to purchase any of my services and they succeeded from the free stuff right here, and you can also do that. So please go ahead and support the channel if you want by purchasing any account that you want to purchase using my links right here. I get a commission and I appreciate you a lot. Let's continue. Now there is a difference between pattern number 1 and pattern number 2. The difference has to do with only one thing, with the distance of the bottom part of the fair value gap and the bottom of candlestick number 2, guys, out of the 3 that created the fair value gap. So we have candlestick 1, 2, and 3, okay, and 1, 2, and 3. But look right here at the first pattern, right on the first pattern. If I delete those things just to make things more clear, this is your FVG area between those lines. In both situations, look at the distance that we have from the bottom of the FVG until the bottom of candlestick number 2 right here. Look at that. It is 18 points here. And look at the distance that we have right here from the bottom of the fair value gap until the bottom of candlestick number 2. It is only 4.75, only 5, let's say, points. right here. There is a huge difference. So the first pattern has a huge distance from the bottom. If we want to buy, those are bullish FVGs, from the bottom of the fair value gap until the bottom of candlestick number 2 out of the 3 that created the fair value gap. And pattern number 2 has a small distance from the bottom of the FVG and until the bottom of candlestick number 2 out of the 3 that created the fair value gap. So now actually we are looking at candlestick number 2 out of the 3 and not candlestick number 1 or candlestick number 3. We are interested in the distance of the bottom part of the FVG and until the bottom of candlestick number 2. Fantastic things, guys. So now how are we entering this thing? Go to the left of your screen on TradingView and click on this thing right here, on this arrow. Then move down, go to the gun box, place it to your favorites, and now you're gonna be having it right here. It's gonna look a little bit different than mine, but we don't care about that. It's gonna do its job. So grab this thing from the bottom of the FVG until the top in both situations. Okay, from the bottom until the top of the FVG. So we have highlighted our whole FVG area. In both patterns, the entry is gonna be taken at the middle of the fair value gap with a pending execution. Here you have buy limits. In both situations you have buy limits. Here also at the middle of this fair value gap with a buy limit. Now that we have identified the middles, I can delete the gun box in order to eliminate confusion. Now the rules are for pattern number 1 that it has a huge distance between the bottom of the FVG and candlestick number 2. You will be measuring your fair value gap and we have 2.5 points. We are measuring the distance of the fair value gap right here and we have 2.5 points. And you will be placing an extra 2.5 points below. So now we have a stop. This is the same for Forex as well. You can calculate it in pips. It's the same thing. Okay, 1.25 points plus 2.5 is 3.75. And this is your trade right here. Right here though, where the distance from the bottom of this fair value gap until the bottom of candlestick number 2 is small, you will again place your entry in the middle, but the stop loss is gonna go below candlestick number 2. This is the difference. It is a very simple thing to see and use, guys. Very, very simple thing. And of course, we're gonna move on to the charts. First, we will take a beautiful, beautiful screenshot right here because this might become the thumbnail of this video as well. And now that we have saved our screenshot, we will go ahead. There it is, by the way, if we need it again, we will go ahead and we will be showing those exact examples that we showed here. And we can, of course, show a bearish example as well later on. So here, right here, on this explosive leg that we see, do we have an FVG? Yes, we do have an FVG, and our FVG is this FVG right here. Now, if you would be taking this leg over here, by the way, this leg right here, your bottom FVG would be this FVG right here. Very good. So we take this bottom FVG right here, on this leg right here, okay? And we ask ourselves, is the bottom of the FVG, does the bottom of the FVG, which is this one, does it have a huge or a small distance from its bottom until the bottom of candlestick number 2? If you recall, this is candlestick number 1, this is candlestick number 2, and this is candlestick number 3, and those 3 created our tiny fair value gap right here. So does it have a large or a small distance? It is an enormous distance. What do we do in this occasion? We take the trade from the middle, as we showed in the example. We take the trade from the middle, exactly right here, and we place the stop loss here. Then we measure we measure the distance from the top to the bottom, and here we see that the distance is 1.25 points, so we add 1.25 points to those 0.75, so we do that 2 points right here. So this is your stop loss. With this strategy, you will be going for a 2-to-1 reward to risk. Let's move forward and see how this is gonna be playing out. Lovely guys. And now your trade has already finished. Pending order, and you are already finished. And you might say, again, all in retrospect, Chris, where I'm proving that every single day with my group, even August, that it has been a shitty month for everybody. For us, it was a good month. We made money, I made money, and many people from the group made money. Again, guys, if you go ahead on my homepage right here and support the channel for this amazing content by purchasing any prop firm that you would purchase, but with my codes that give the highest discounts in the market. Yes, you heard that right, the highest discounts in the market. Not only you are supporting the channel, you are also gonna email me and I'm gonna give you free access in the trading signals. This is a deal that I have been running for a very, very long time now. So this is also your way to enter the trading signals, guys. Okay, you just go ahead, view email address and chrisangelstv@gmail.com. You go ahead and you email me there if you have purchased any account from any of those prop firms, and I have them from best to worst. And then you email me and I also give you access, plus you're getting the highest discount in the market, plus you are supporting my channel. So in the main page of the channel, go to more right here and I have everything for you right here. Okay, now you see that I didn't give you unrealistic expectations even in these retrospect scenarios that I'm teaching right here. So I didn't even tell you, go ahead and target that for a 4.5-to-1. I told you, go for a 2-to-1 reward to risk. I want to teach you not to go for enormous rewards to risks, but to go for, let's go back, for normal rewards to risks. Okay, trading the lowest, the smallest, the move that we are trying to catch, the better, the more chances that you're gonna be catching this move. Now, do we have another leg right here, immediately after that leg? Expansion leg, strong leg, yes sir. And ma'am, we do have a leg. Do we have fair value gaps? Yes, we have this bottom fair value gap. This is the lowest fair value gap because look closely, beginners also, those of you who are beginners, here we don't have a fair value gap. Why? It is filled in with this wick of candlestick number 2. So this is not a gap right here because there is a wick that fills it in. If this wick would not be here at all, so let's assume this wick does not exist, then this would be a fair value gap. So here we have two gaps. The one that is created here, you see, a gap, an unfilled gap. So if this candlestick would be like that, it would have filled it. It wouldn't be a fair value gap. And another gap from the bottom of this candlestick and the top of this one. What did we say? We take only the bottom one. And now we measure. We always take the trade from the middle, as we said. Okay, we want to increase the reward to risk or our chances of winning the trade. The middle is exactly right here with our gun box as we showed it previously. So now let's measure from the bottom. Let's forget about the stop loss. From the bottom to the FVG until the bottom of candlestick number 2. Out of the 3 that created this bottom fair value gap, those 3 candlesticks created it, 1, and then 2, and then 3. Is the distance from the bottom until the bottom of candlestick number 2 huge? No, it is not. So you take the trade from the middle and the stop loss goes a little bit below candlestick number 2. You target a 2-to-1 reward to risk, guys. And off you go. Here you go. You have another win. Again, I could have gone ahead and I could have told you, guys, go ahead and target, because I saw the examples, of course, beforehand, a 4-to-1 reward to risk, and I would make more of you extremely happy. Personally, you might find it weird, but I'm trading with a 1-to-1 reward to risk. Not that my strategy, the premium strategy, which you will find about even if you purchase any account of those prop firms right here. Not that the premium strategy is not running far enough. This is not the reason why I'm targeting so low, because I'm winning 95 to 97% of the time, and I'm not even exaggerating. You will see it. I have a ton of lives recorded where you can go ahead and see that. Okay, so now let's go ahead and find a bearish example, because you might say, Chris, I understand some of you might not be beginners, so let's go here. This is a perfect example. In this downward movement right here, you might say, Chris, and we took those trades with my premium strategy, by the way, and we pinpointed those trades exactly from the points of interest. I'm not gonna say more right here, but you can access it almost for free, and you will not need anything else, I guarantee that to you. But here I'm gonna show to you how you could be taking those trades with this strategy right here. Okay. Now right here, with this strategy, we have an explosive move down, very explosive move down, okay? You can all see that. And we have, I can see, we have two fair value gaps. We have this huge gap right here, and we have this gap right here. Now, because we want to short, we want to sell, we will be using the top fair value gap for my beginner friends out there. Not the bottom one. It is the other way around, the closest to the top of the move. And for the bullish, if you recall, it was the closest to the down of the move. Okay, so the closest to the top of the move is this one, and it is created by candlesticks number 1, number 2, and number 3, this huge candlestick. Those 3 candlesticks, if you exclude this price action after that, so these 3 candlesticks have created a gap, and it is this gap right here. So we take the gun box and we place the gun box from the top to the bottom of the FVG. And we will be taking the trade, the short trade this time, from the middle. Now forget about the stop loss for the time being, and measure from the top now of the fair value gap, which is here, until the top of candlestick number 2. Is that an enormous stop loss? No, it is not. You can go ahead and place your stop loss above candlestick number 2. Okay, this is the second pattern again. And wait for price to activate you, like that. Okay. Now, we, believe it or not, if you don't believe, I have the lives recorded, so if you purchase any of those accounts again, from my homepage right here, go to my channel and click on more, and you purchase any of those accounts right here, and you email me at chrisangelstv@gmail.com. I will give you access for free in the signals, and then you will be able to see that we took the trade from a difference like that. So our entry was exactly right here or so. Anyways, this is also a way to win. A 2-to-1 you will be targeting, and you have hit your 2-to-1 reward to risk. Now, did this trade run for more? Yes, it almost went again for a 4-to-1, but I want you to go ahead with this strategy and target a 2-to-1 reward to risk. If you want to come on the winning side, this is what you should be targeting. And yes, this strategy works on everything. You can apply this strategy on everything. This is a fantastic, fantastic strategy. Even this example that I see right here, maybe this would have given you a win as well. I'm not quite sure. Maybe you wouldn't have been activated. Let's check it out. In retrospect, you wouldn't have been activated, and it is a pity, because otherwise this would have been a very, very, very nice win. And then if you would have kept it open, it would have stopped you out. Yeah, you will have also losses, guys, but the 2-to-1 is gonna help you remain in the winning side, on the winning side. So this was our fantastic video for today. I have been promoting the best prop firms, and I have been trading in the best prop firms that are the best prop firms for you, the users, and for me, of course, because I want to end every single month in profit. This is how you should be viewing trading, not as a getting quick rich scheme, but as a way to be in profit in the end of the month. If it is $100, it is $100. Guess what? it is better than minus 100 or minus 2000. This is the philosophy that you should be going by and you should be adhering to, guys. Okay, this is the correct mindset. Don't let anybody tell you, I made 20,000, bro, you made only $300. Yes, you should be proud of yourself. This is very hard game, a very hard game, the game of trading. You should be proud of yourself. And if you're going to support me, your mentor, your free mentor right here, who is not exaggerating things, who is not promising a get-rich-quick scheme, I'm going against all marketing right here. You can go ahead and support me like that, and I will also give you access for free. You don't need to pay me anything else. Okay. And guys, another thing that I want from you is turn on the notifications bell when you are subscribing. So I want you to subscribe, of course, and go ahead and share this video with every single person that you might know in this whole earth. As a matter of fact, go to people on the street and spam them and tell them this is Chris FX, the one and only mentor who is showing those things for free that they have been hiding from us for a very, very long time. Actually, don't do that. This is a joke. So this is going to do it for today, traders, and I will see you in our next video. Bye-bye.